Hello, traders. It's Sunday, April 28th. We are about 3 hours before the futures will open up, so I have no idea what's going to be happening overnight there. But I do like the way that the market's currently setting up. Please make sure to hit the subscribe button. It's going to help my YouTube channel. Ultimately, I'm trying to educate as many traders as I possibly can. I hope you find my content to be very useful. When we start these videos, I always start with the previous picks. That way you can gauge the performance of this system. My last pick a week ago Sunday was BAC. I only gave you a long because I was looking for a market bounce. Well, we got the market bounce, and we'll discuss that in just a second. BAC had announced earnings. The stock had moved nicely off of that earnings reaction, which was slightly negative, and the table was set for the stock to move higher if we got that market bounce, which we did. So you can see that BAC, this was the price action on Sunday, and the stock is about $1 higher. So not bad. It's not a huge mover. It's a bank stock. So on a $38 stock, a $1 move is nice. I still like BAC. You can see how it's challenging this little breakout level right here. Well, in the next few days, I'd like to see it move through that resistance. Wednesday, during a live event, PANW. That was the long that I had highlighted. And in fact, I wanted to sell an out-of-the-money bullish put spread. So we're going to be focusing a little bit more on swing trading in these videos. I realize that a lot of you don't have time to watch the market intraday, and many of you swing trade. So I'm going to try and give you opportunities that set up well for swing trading. Of course, there are going to be day trading opportunities for those stocks as well because we like them on a D1 basis. PANW. I really like the way this is setting up. We've got nice horizontal support right here. We've got an upward sloping trend line coming into play. This is a major trend line as well. You can see how far back that dates. That's a nice support level. We also have the stock above AVWAP-E. It's going to be announcing earnings. 528 is what we've got, but 521 is what I'm seeing on other sources. So keep an eye on that earnings date. The play here was to sell an out-of-the-money bullish put spread, and we were going to be keying off of the May 17th 272.50, 270 bullish put spread, which was way down here. So you can see that's even well below this 200-day moving average right here. And it has about 3 weeks left till expiration. We were doing that for a 50-cent credit. I like the stock. You can see how it's found support at that horizontal level. It's made a higher low double bottom. It's gotten through this downward sloping trend line. It's above AVWAP-E. It's above the 50-day moving average. I believe it's got a nice clean path to that 100-day moving average. If we take a look at what it's done on a daily basis, you can see how the market was selling off pretty hard in here prior to this week. This stock had actually been moving higher, and it held up very well during this market decline. That's what told me that there were buyers. So I like selling that out of the money bullish put spread. It expires before the earnings release. That's very, very important. And the premiums were pretty decent on it. So I still think PANW is going to continue to move higher. Let's take a look at the market. So what happened this week? We actually had a lot of news that came out. So into earnings season, we had this relatively heavy selling pressure. But you can see on all these candles that there was overlap, and a long red candle like this is created when you have a higher open. That means the S&P 500 gapped up, and then all day it reversed. So it filled the gap and then it continued to go lower. Well, we already know that gap reversals are our best opportunity for day trading. So when we saw this long red candle right in here, Warning, 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 danger. That's all I've been telling everyone since I saw this long red candle. This is a time to get out of all your swing trades. This is a time to go into day trading mode. We caught all of this move lower because every day the market gapped up and sold off, gapped up and sold off, gapped up and sold off. Well, in here, right above the 100-day moving average, this is where I was looking for a bounce. Please go back and watch my videos. This is an opportunity. This is a window of opportunity for us. I am leaning on this strength. Did all of these buyers all of a sudden decide that the market was going to roll over and that the economy was going to go to hell in a handbasket? No. Bull markets die hard. We were going to see a bounce, and this was a nice entry point for a bounce. We don't know how long the bounce is going to last. We don't know how tall the bounce is going to be. We only know that we're going to get a bounce. So we're going to be gauging the price action that we see along the way. Well, we had GDP came out. We had earnings releases this week, big earnings releases. We heard from Tesla. We heard from Microsoft. We heard from Google. We heard from Meta. So the long and short of it is that Tesla was relatively weak, Meta was relatively weak, but then we had decent price action from Microsoft and Google. So they kind of balanced each other out. I was looking for better performance, to be quite frank. I didn't think we were going to see as much weakness as we did. It's nothing horrible, but when I was looking for long green candle, long green candle, long green candle, right up to the 50-day moving average, I didn't get that, okay? It was not quite the strength that I was looking for. Had I gotten that strength, had we challenged that 50-day moving average and AVWAP-Q, then we had a chance to really put the hurt on shorts who had been loading up in here. And when they covered, we had a chance to get back to the all-time high and then perhaps some. But this has been a little bit choppier. So you can see on Thursday, we did have a low right here that established a higher low. And then Friday, we were able to rally up off of that level. Well, in here is where we got GDP. GDP came in at 1.6%. That was a lot lighter than the 2.5% that they were looking for. And it is a significant drop from 3.6% last quarter. Well, okay, what does that mean? Well, we also had the PCE deflator on Friday, which came in at 0.3%. It's a little hotter than what the Fed would like. So you have an economy that's slowing down, and you have inflation that is very stubborn, consistent with what the Fed has been saying. And now you've got an FOMC meeting coming up this week where I didn't believe that the FOMC meeting was going to really be much of anything. It was just going to be, we got GDP. It came in somewhere around 2.5%. We've got the Fed in higher for longer mode. They're really not going to change much in the way of rhetoric. But now that we have a pretty decent sized pullback in economic growth, traders are going to be looking for the Fed to say, hey, you know, we're starting to see some signs that the economy is starting to falter a little bit. So yes, we might be moving up our timeline for easing interest rates. That is why you got this big bounce on Thursday. It's the old bad news is good news crowd that came in and supported the market. We go into the 5-minute chart and you can see how that low was established very early in the day. And then we got a series of higher lows in here. We take out the high and we go into the gap. This is where you could have gotten long. And then we had a nice, decent rally throughout the rest of the day. So that was actually pretty decent price action. And on Friday, we also had a gap up. So the gap up was preserved, meaning we didn't start to slip into the gap and fill the gap. No, buyers were in here. Market pulled back just a little bit to VWAP, but the selling pressure never got going. We never filled this gap in. That's a sign that buyers are pretty engaged here. So I feel very comfortable holding long swing trades overnight. But here's what I'm going to be watching, and this is going to be a very, very busy week. So we're still going to hear from Apple. We're still going to hear from Amazon. We've got the FOMC statement on Wednesday. Traders are going to be looking for the Fed to soften their tone a little bit, be a little bit more dovish, maybe start getting that September rate cut back in focus. The Fed has pretty much said, at least many of the officials have said, do not expect a rate cut in 2024. Well, that might shift a little bit. So we'll be able to see if they are considering some easing. The one issue that I've had is that as long as economic growth in the U.S. stayed strong, that's what I wanted to see. I didn't care so much about higher for longer interest rates. I wanted to see that growth remain steady, because as soon as it started to falter, what's going to enter the equation is, did the Fed wait too long? Are they behind the eight ball? Should they have started to cut rates earlier? That's going to be the prevailing thought now. And now the market is very much going to be expecting rate cuts sooner than later if we start to see some other additional signs of economic weakness, which, by the way, this week we're going to get ISM manufacturing in addition to the FOMC statement. We're also going to have ISM services, and then we're going to get the jobs report. We'll have ADP in there. We'll have the JOLTS numbers. So tons of employment information. I believe the employment numbers are going to remain strong for one reason only. I'm watching the weekly jobless claims numbers, and they've been low. They are not ticking higher. So I think the job scene is going to remain bullish. It's going to remain robust. ISM manufacturing, ISM services, we've seen a little bit of retracement there. So that could be a weak spot. So we're really going to be focused on what the Fed is going to be telling us. Apple earnings, their iPhone sales in China are down 19%, which incidentally, just from a global economic perspective, you have China, which is really struggling, and you have Europe, which is really at flatline. It's 0% growth. If they would have had a negative number this quarter, they would have had an official recession, because 2 quarters ago they were in negative territory. So you're not getting any global growth anywhere right now. So you've got China is not good, Europe is not good. So the US was the best game in town, and now that's starting to falter a little bit. So I'm not crazy that our economy has a little kink in the armor. I'm not crazy about this selling pressure here. So here's what I'm watching. Yes, I believe that we can be long swing trades in here. Okay, I like this. Got a sell-off. We have support above the major moving average, which tells me that buyers did not feel that we were going to get down to that 100-day moving average. They felt that this was as low as we would get, and they needed to aggressively buy. We got a little bit of a bounce this week, and then Thursday we had that gap down and a rally right out of the gate. A higher low double bottom, again above the 100-day moving average. What did we do Friday? Boom, did we knock those gains from Thursday right back down again? No. We gapped up Friday, and we held those gains, and the market closed near its high of the day, above or at VWAP. So that gap up held. That tells me that buyers are engaged. Well, what do I want to see now? Well, things are going to be a little bit quiet Monday. So tomorrow, if you're a day trader, this is a day to keep your powder dry. Pete, how the hell can you know that? The market's not even open. It's Sunday. I know that because we have major news coming out. I believe that Amazon reports after the close on Tuesday. That's going to be big. And then Wednesday, we have the FOMC statement. So traders are not going to be super active ahead of major pending news. And so this week is going to work in fits and spurts. So then Wednesday, we've got the FOMC. Okay, we're going to get an initial move off of that, and then we'll see where things are Thursday. But then Thursday night, we've got Apple reporting earnings. And then Friday morning, we've got the jobs report. So if the week settles out and we close above AVWAP-Q and we close convincingly above AVWAP-Q, which is at 512.67 as we speak. So let's call it 513. We want to close convincingly above it by the end of the week. We don't want to peck at this resistance. We want to blow through it. Well, if we blow through it, then I'm going to be very satisfied with holding my long swing positions. If Tuesday and Wednesday and Thursday we're poking and we're not able to get through, especially after the FOMC statement, I want to see us blow through AVWAP-Q on the reaction to the FOMC statement. That will tell me that they are dovish and the market likes it. None of this wishy-washy crap where, higher for longer, yeah, there's some signs of economic weakness, but inflation is persistent. Really no change in their rhetoric would not be what I'm looking for. And the market, I'm not going to digest the news. I'm not going to read through their minutes. I don't need to do that. All I need to do is watch price action because the big institutions are doing that for me. And if they decide that the Fed is sufficiently dovish, then they will jack this thing right through AVWAP-Q. And Wednesday after the close, we will be closing firmly above it. And then I will be happy to even add to my swing positions. So if we're poking around and not making any progress on that after the FOMC statement, I might even reduce my swing positions because I don't want to see a double top lower high on a higher for longer message where the Fed is not going to give an inch and they are going to stay firmly hawkish. That I really don't want to see. And if we can get through this AVWAP-Q fairly quickly, it's going to put some pressure on shorts to cover, and then we've got a chance to attack this all-time high. So that's exactly what I'm looking for this week. Recap, big news coming out. Yes, starter long positions, starter swing positions. I'm all over it. Monday's going to be slow. Tuesday could be slow. Lots of pending news. Not adding to my bullish swing positions, okay? Wednesday, I'm seeing what the hell happens at these major moving averages and AVWAP-Q, and I want to blow through it. If we do, I'm adding to swings. If we're not, I'll hang on to what I've got and I'll see how the news plays out Thursday and Friday. But for damn sure, I want to be clear of these levels by the close Friday, and I want to be so convincingly. If not, then I'm going to shift to slightly, I'm going to be neutral, but I'm going to be looking for that double top lower high, and it's going to tell me that the Fed is not giving the market what it wants and that we've got some signs of economic weakness. There are times when you need to step up and you need to trade some size and be willing to add. This is one of those times. You've got your initial and you're looking for this move, and then you will add. So let's take a look at some trades. I'm going to show you how easy it is to find these trades using Option Stalker Pro. It's what I developed exactly for this system. So let's go in, let's take a look, see what we've got. I'm just going to create a search and I'm going to go through my process. I'm going to create some pretty easy searches and we'll see what it yields and we'll find a good trade or two. I am only looking for the long side right now because of my market opinion. And I'm fairly confident we're going to see some follow through. Higher low double bottom above that 100-day moving average. Pete is bullish for this week. So let's go in, and we always want to have a decent option liquidity rating. So as long as you're somewhere in the -2 or higher range, it's going to be pretty decent. So we'll go with the -2. Right now we've got lots of earnings releases coming out. So let's go in and make sure that we don't have any earnings reports coming out. In fact, let's take a look for companies that have recently announced earnings in the last 20 days. So the companies that are going to hit this list, this search, have announced earnings in the last 20 days. That means I don't need to worry about earnings reactions, and I don't need to get out of a position that's working, and I can start looking for companies that have had a good reaction to earnings. Yay! All sounds good, right? So, AVWAP-E. I'd like to have the stock above AVWAP-E. All right, so that is the average weighted price since the earnings reaction. Okay, that's a good variable to have. Let's see what else we might have here. How about strong relative to the market? Yeah, that would be good to have too. So, recap, liquid options, earnings in the last 20 days, decent reaction to earnings because the stock is above AVWAP-E, and relative strength. All right. That is not a bad list. We could knock through that, no problem. We could add some other variables in here. And so let me think about a couple of other variables that I might want to add because I don't have to click through that many stocks. I could put trade signal up here and see how many others fall out. We got a few of them to fall out, so still not bad. Now I'm going to do something a little bit different. These could all be stocks that we want to trade. What I've been mentioning to you is that if you have an option implied volatility that is somewhere between 0 and 35, that you can be favoring in the money call options. And so let's see what might come up. So we've got a value of 0.01 to 0.35. I need to mark it. That would help. There's my list. Okay, so these would be stocks where I'm looking to buy an in-the-money call option. Deep in the money, they've recently reported earnings. I know I'm not going to go out to May. May is only a couple weeks away now. I'm going to go out into June. When you're buying in-the-money options, you want to go out 2 or 3 months. You want to buy them deep, deep, deep in the money so you have a very high delta. And you plan on hanging on to this position for at least a couple of weeks. So you don't want to be exposed to time decay. That's why you go so far out. All right, so we can click through these, and I'm seeing a lot of banks in here. I'm seeing some energy stocks in here. So because I've recently highlighted a number of bank stocks, that sector did very, very well, I'm going to avoid those. And let's see what else we can do here to eliminate. Google just announced, so we're going to click through a couple of these. So I'm just going to click. I'm going to say yes or no on the chart. We'll go into the daily chart and look at it. AEM, not bad. I would like to see green here, not red, post earnings. I wanted to see it go up on that initial earnings reaction and continue to grind higher, not run up and then pull back all day. So not my favorite. APH. I might have my pick of the week right here. I mean, look at this tight, tight, tight price action. Got a high plus coming in right in here. I'm not too worried about that. above all the major moving averages. Stock pulls back a little bit. There you've got the market right in here. So in the last 5 days, you can see this stock has shot higher. Now here's the earnings reaction, and this is a pretty good tell. So you've got earnings before the open. They love it. The stock rallies up through this horizontal resistance. Okay, well that's going to meet some sellers because there's been resistance there before. Whap, 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 whap. They knock it back down below that horizontal resistance, and market was pretty flat that day, so they weren't having anything to do with the stock that day. Let's go back and take a look at it. We'll be able to see it here. There's your earnings gap up. Wham, 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 wham. They pull it all the way back and they fill the gap in. But then the stock does bounce a little bit off of it. Here's the tell, is they test that breakout one more time. And look at that bounce. Really strong. And look at the stock close above the high from the initial earnings reaction. Oh yeah, they want this stock. And now the stock runs higher with the market. So D1 chart, I like it. I don't think I'm even going to go through any other searches. You've got a downward sloping trend line right here. So this is like a bullish flag formation. You've got all this strength in here. APH, I like it. We know it's got liquid options. We know the options are relatively cheap. So in this particular instance, and I'm running my Intrinio feed right now, which doesn't allow me to take a look at option prices, but I can go into my option pricing here. So I'm going to go out into June, and I'm going to go with a June. The stock is at 120. So I'm going to go out to the June expiration. I might have to go all the way down to the 110 strike price, which I'm fine. 110, June 110. So June 110 calls are 1020 bid, offered at 1240. Well, that's a wide bid-ask spread. So another cautionary note. When you have very wide option bid-ask spreads, there's one thing that this means immediately. Immediately. You are not going to get in and out of this position because the slippage, the difference between the bid-ask spread is way too wide for that. So on the way in, you've got to work something between this bid-ask spread. And if I were eyeballing it up, you've got a $2.20 difference here. So if I can pick these options up somewhere in the $11.80 range, not too bad, because at $11.80 on the 110s, you're paying about $1.40 over parity. That's not too bad for 7 weeks of life. And these options are going to move point for point with the underlying. They have intrinsic value. So if push came to shove ever and I were riding this thing and I felt that the option markets weren't properly priced and I was getting close to options expiration, like 2 weeks away, and these options were bid below parity, I could simply go out and sell the stock and exercise my call options if I had to in a liquid market. These are going to be more liquid than that. So I would go with the APH. I like these. I like the June 110 calls. If I can get them for somewhere around $11.60, $11.80, they've got plenty of intrinsic value. You're only paying about $1.20 over for 3 weeks of life. I like it. I think that's a really good trade. Bullish bullish flag formation. I showed you the price action I like post earnings. Yeah, this stock is continuing to grind higher. I think the market's going to continue to move higher. We've got super tight price action in the stock. Did you see how easy it was to find that trade using custom search? I knew what I was looking for. I'm going to click through a bunch of other these and I just go yes, no, yes, no. AR, I like it. I like this breakout right here. That is a really nice horizontal breakout. Yeah, those are automated trend lines. Yeah, I like that. AR looks really good. AXP, initial breakout, pulling back a little bit. Want to make sure this breakout holds. AZN had a big gap up, so not going to chase that. That's going to need time to confirm the breakout. BAC we've already looked at. I'm going to skip through all the bank stocks because I've highlighted banks quite a bit. Too choppy for me. DAL, grinding after earnings, breaking out. Not bad, not bad. Airlines in general can be fairly choppy. EQT, nice little breakout through all the major moving averages. Lots of overlap in here, not a strong breakout. Decent volume, so it's got, some decent things, but FCX, bullish flag formation, not bad. Getting through this resistance level. All right, I'm going to click through a couple more here. GE, that's nice. Earnings, gaps up, holds the earnings. There's your horizontal was resistance, now support, finding support there. Did not sell off with the market, compressing here above AVWAP E. Yeah, I like it. I like GE. I could see GE working. I'd like to see some follow through in here. I would have liked to have seen better performance on these two green days here. Boom, 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 up through that resistance. So I would have alerts set on it, but I would not be in there buying it. GM still got to get through that resistance. Google had a really nice earnings reaction. Google, you'd be watching to see that this gap holds and then for it to creep higher 6 or 7 days later. But it looks good. I do like that. GS is a bank stock. I like the breakout. GS looks perfectly good to me. JPM. Thing with banks, you got FOMC. Bank stocks tend to move a lot on FOMC, so be a little careful with your bank stocks into that FOMC statement. Merck, kind of choppy. This is a decent reaction here. Pepsi and PG are going to be choppy. So nothing there. RCL, RMD. RMD. Okay, I'll look at this chart right away. I like it. I like it. Oh yeah. And you're in this gap right in here. You're through that horizontal. Was support, is resistance, now support. I like this RMD breakout. Excuse me, this is very nice. Yep. It's above all the major moving averages, big horizontal breakout, great earnings reaction. So now for this, you want to see as much of that green candle preserved as possible. If we go through 4 or 5 days from now and the halfway point of this long green candle is preserved, I think that's where you can start getting long RMD. So I really like it though. This stock, it's a major breakout. Let's do that one more time and I'll zoom out and show you some of those automated trend lines that come into play, and many of them very significant. That is significant. That is significant. That is significant. These are all really nice trend line breakouts here. This is pretty big time here. This is nice stuff. But one candle does not make a trend. So let's see what happens to this candle over the course of this week, this very important week. If most of it is preserved, this stock's going to go higher. I would have no problem selling a $200 put on the notion that this breakout is going to hold and that I would be a willing buyer of stock at that level. A couple more. RTX really hasn't moved much, still compressing even after earnings. SCHW, that's tech. TXN, not bad, trying to break out right here. Post earnings gap up, holding that level for right now. Not bad. A little choppy on Texas Instruments. So I'm having to explain all this to you, but I could click through this chart in nothing flat and I would have easily gotten to APH, your pick of the week, and RMD, which I think is setting up to be a really good pick. Let's do something really quick here. So what I'm going to do is I'm going to go to a minimum threshold here of 35 on the option implied volatility. And when I do that, that's going to set the minimum threshold. Now I'm going to be looking for expensive options. Well, why the heck would I want to deal with expensive options? I could actually put this at 5.00. There's no upper bound that I need. This is going to show me good put credit spreads, relative strength on a buy signal. Okay, those are good. Above AVWAP-E, has recently released earnings, good option liquidity, not many stocks to take a look at. There's one I can tell you already I have no interest in. So if I'm looking to sell an out of the money bullish put spread, this VKTX in here, this is a biotech stock. And I know because I highlighted that many weeks ago, and man, was that a really good winner for us. That stock like doubled overnight. AA. Earnings reaction right there on the A. So you've got a drop in the stock, but an overall compression. Hasn't been able to do much of anything since earnings announcement. And we can see horizontal was resistance. Now support, support, support. So we can hang on to this level here, which is somewhere around the $35 level. We can even go down to the $34 level if we want to. We're above AVWAP-E right here. A little bit of a horizontal resistance line in here. We're above all the major moving averages. It's compressing very nicely, so it's got good horizontal support. So what would I do with this information? It didn't really rally with the market, but it also didn't sell off with the market. If I've got high option implied volatilities, we are post earnings, so why don't I just sell some of that premium on the notion that the stock is going to continue to compress in here? Could do that, go into option pricing. Again, I'm looking to stay front month, so now I'm going to be looking for that May expiration. And if we go down to the $34 put right here, I can see that I can get, let's say 55 cents for that. 55 cents. Those options are going to expire in 3 weeks. And I'm going to have to put up in margin 20% of the underlying. All right, so I'm going to have to put up, let's say somewhere around $7 in margin. But I'm going to be bringing in 55 cents. So I'm generating a really decent return of somewhere around 7% in 3 weeks. 7% in 3 weeks. But I would have to be willing to buy the stock down here on support at $34, which actually my price wouldn't be $34. My price would be $33.50, $33.45. I'd be willing to buy the stock down here. And given my bullish bias for this week at minimum, every week that ticks by and the stock does this, I'm making money. I can reevaluate the market. If I'm not getting that nice big breakout like I had expected to see, then I could take some of the gains that I have on that time premium decay. That's how I would play it. Really a nice income generating strategy, very low maintenance. And you'd buy the stock at $33.50, and then those option implied volatilities, you could turn right around and sell the $34 calls on it, run the wheel. I like it. Let's take a look at a couple of others and see if there's any in here that I would not be interested in. That's pretty choppy, so I wouldn't be interested there. Yes, you've got some support levels in here that you can lean on. Snap had a big breakout. I wouldn't chase that at all. It's in the gap. I believe the stock has a chance to pull back, maybe even to that 100-day moving average or below. So no, I wouldn't be interested in that. Tech, Nice big run up in here. High option implied volatilities. I want it kind of sticking close to a support level that I can lean on. Up in here, I feel like I'm in no man's land. VKTX is biotech. This might look like really nice support, everything good in there, but with biotechs and they have a weight loss drug, all you need is for one clinical trial to come out poorly, which that's why the stock ran up like this, was a good clinical trial, but you can see a big whiff in that. VRT, I like VRT. This actually looks good, and this stock is not too far out of the gate. What's that mean? Too far out of the gate. Meaning, like Snap, I don't want to have anything to do with Snap. That train has left the station. Look at that gap up, okay? I'm not going to chase all the damn way up here. The EMA 8 is down here. But on VRT, not too far off that EMA 8. You've got a nice horizontal breakout here. You've got some excellent option implied volatilities. I would prefer to see the stock come down to AVWAP-E around that $89 level and then maybe be able to get something off at the 75 strike down in here where I've got really nice support. So let's take a look and see if there's any premium down here at all on the $75 puts. I'm not expecting it. Let's take a look. May 17th, $75 puts. 20 cents bid offered at 25 cents. There's really nothing there for me to lean into. And we can go to the June option expiration, see if there's anything there. And here we would be going 75.70 perhaps. Got nothing really there. You've got that spread currently bid at about 50 cents. I need to get $1 for it. So it's just too far out of the money for me to really be interested in it. But I do like the stock price action. Sells off immediately. Bullish engulfing candle on Thursday. Finishing above the open post earnings. I like that a lot. As it confirms this breakout right here. And then it had follow through on Friday. And it had a little bit of a dip off of that opening move, but that's kind of what the market did as well. I think VRT is a stock that you can put on your bullish day trading list. Okay, it's got high option implied volatilities, so I would not be out there buying options on this. Yes, you could buy some call debit spreads on it, but you could also just trade the stock. It's a $93 stock, so if you're day trading and you've got 4-to-1 margin release, just day trade the dang stock. You can buy plenty of shares of stock. So that's my video for this week. So easy to find trades. I mean, I just used a handful of variables here. Earnings are so important to us. I can run earnings searches to find out which stocks tend to rally into the number. I've got that right here. So strong. This is buy into earnings. These are your stocks that tend to rally into earnings announcements. They've done so more than 75% of the time over the course of the last 3 years. That is significant. We've got AVWAP-E here. You had one bad day for Amazon and it was right back at it. Now this announces on the 30th, which is Tuesday. Stocks tend to get really choppy ahead of earnings announcements, but there might be a day trade in there for you on Amazon. DKNG, DVN. This is nice. This is a compression when the market was still waffling around and trying to figure out what it was doing. This stock was starting to inch higher. Look at that nice tight price action. I think DVN is going to set up well for some day trades. Earnings going to be released on 5/1, so you got a few days to consider trading this. So lots of ways. Earnings reactions are a great way to trade post earnings. Let me think of a stock that we had that just posted. Well, let's put Google up. Gee, should I buy Google after the earnings announcement? Well, I can go into E-reaction and I can see what the stock has done on a 5-minute basis the last 4 quarters. Stock has a tendency to gap up or gap down and then flat line. Gap up, flat line. Gap down, flat line. Okay. So maybe when I come in, I don't need to chase this stock on a big earnings reaction. Oh, look at that. It gapped up and it flatlined. This E reaction is such a nice tool. You can go back and see what the stock has tended to do after gapping up or gapping down post earnings. So we're also filtering out if I'm looking to sell bullish put spreads. I want to make sure that the company's not announcing earnings within the next 3 weeks, the next 4 weeks. I also want to make sure there's weekly options. I can mark that. Instead of prior earnings, no earnings within, and then I can mark, let's say 25 days. Okay, well, that's 5 weeks. Make sure that we've got good option liquidity. Hey, let's make sure we got an option implied volatility greater than 35. Let's make sure the stock has got some relative strength. So many different ways to find great trades. It just takes a matter of minutes. Fantastic search engine. So for those of you who haven't come in and tried Option Stalker Pro or checked out our chat room or read my educational course, which I hope to complete this year. I'm about 3 years into it. I've got another couple of months of writing to do there. You should come in. You can learn the system. You can see it in action in the chat room every day, and then you can try Option Stalker Pro and see where all of our trade ideas come from. Thanks so much for watching, everyone. Good luck with your trading this week. Monday and Tuesday, going to be pretty light. Then it's going to be like drinking water from a fire hydrant. We're going to have lots of news Wednesday, Thursday, Friday. We need that driver. We need to finish convincingly above 513 basis, the SPY, with a long green candle closing on its high with volume. Then we can add to our bullish swing trades. Then we can expect to challenge the all-time high on the market. Anything less than that, any waffling around with resistance here Friday, we've got to be very cautious because this could be a double top lower high and the market will not like what it heard from the Fed. Those are your marching orders. Good luck with your trading. We will see you Wednesday before the Fed. Make sure to check out our live events. We'll be going over everything that's been happening the last couple of days. We'll talk about the Fed. Hope to see you then. Trade well.
Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.